Michael, I just want to get a sense. Okay, it is the fire burning. Then naturally, my question is going to be, what's going to be the water that goes on it? Would it be the removal of anonymity? Of course, there's a lot of guff said about that because it can be tracked who owns it, etc., through the blockchain ledger. And also, what about cloning here? That's another bit of water that could be put onto this. What about scalability? You're going to do 7 times a second transactions with it, that sort of thing. Are these all obstacles in the path of Bitcoin?
Okay, well, when you think about it as digital gold, you say, well, it looks perfect. So will it be banned? Will it be copied? Will it be hacked? And so the only way you know it's not going to be hacked is you watch it for 12 years. That's why it's a much safer idea when it's $1 trillion and 12 years old and it hasn't been hacked and the network has got tens of billions of dollars invested in it to secure it. So no one's ever hacked Bitcoin. So that was the one big concern. The second is, will it be banned? Well, you couldn't know in 2013 when the IRS made it property in 2014 and when the SEC called it property and when the OCC said that banks can custody it. All of a sudden you got comfortable. It's not a currency, but it is a property. The tax treatment says I need to buy it and hold it for a decade. If it was currency, I could buy it for a week and I could transfer it a month later with no tax. That's obviously not going to happen. So what you've got is currency bifurcating into medium of exchange, that's dollars and euros and yen, store of value, that's Bitcoin, gold, or stocks. So that was the second issue. It got normalized as property. The pushback on it, the concern, is it scalable enough? I think my point with that is that if you've got it if you're trying to use it to buy a cup of coffee and replace the dollar, no, it's not scalable enough, but that's not going to happen because the tax treatment is hostile to it. But if what you want to do is buy $1 billion of it and hold it for a decade, you only need 1 transaction a decade or maybe 10. And so you should think of it as a first level settlement network for huge blocks of digital gold. And the way that it grows from here is other companies plug into it, like Square and PayPal. They plug into it and their payment networks. And then MasterCard and Visa plug into it. And then JP Morgan and Morgan Stanley and Citigroup, they will plug into it. And you will have the Fidelities, the insurance companies, the fund companies, the banks, and the mobile app companies. They'll provide the scalability, and it will be legitimized as a store of value. And that's how people will get over all their concerns about either scalability or regulation.
So, Mike, ultimately then, what you're suggesting, as many have, that a country like, let's say, China, which has its population has the biggest number of Bitcoin, they couldn't shut it down even if they tried.
Yeah, I think that if you...
India's trying to do something along those lines at the moment. They're considering this.
There's about 120 million to 140 million people with Bitcoin right now. And I would say it's past the event horizon. We'll have 1 billion people having Bitcoin within 5 years. We'll have 200 million or more by the end of this year. It's going that fast. I think they're adding like 6 million a month or something like that, maybe 8 million a month. So you can't stop it, because anybody with a mobile phone anywhere in the world with a VPN could go and get it, and you could move it peer to peer. So you can make it a bit more challenging. And in India and in China, they'll make it more challenging to buy it and scale. But it's in India and in China, for example, you can't actually access Google or Facebook, but that doesn't make those stocks bad investments. Ultimately, Western Europe and the United States is where the 80% of the money is, or 90% of the money. And between that and moving through major finance centers, et cetera, Singapore and the like, I think you're going to see that the monetary energy from those is more than enough to drive it through the market cap of gold, which would make it 10x bigger. And it should go to between 10 trillion and 100 trillion. And at that point, who knows what happens? I can't be sure.
Michael,
everybody needs that much.
We've only got 2 or 3 minutes left, so just very, very briefly, just answering this question. You think it's going to be $100 trillion market?
I do. I think it's a no-brainer. It flips gold because that's 10 trillion, and so it's 1 trillion now. So it'll run there pretty fast. And then I think it'll kind of start to grow progressively, not at 200% a year, but 100%, and then 50%, and then 30%, and then 20%. And ultimately, the elephant in the room here is there's $100 trillion of treasury assets that are like negative yielding debt or low yielding debt. That $100 trillion of assets and indexes, that all has a negative real yield. And so it doesn't work for insurance companies and for long-term investors and for corporations. They're going to need to find something that's got long duration with a positive yield in every monetary environment. And Bitcoin is the perfect engineered treasury asset. If you were coming out of central casting saying, design me an asset that an insurance company can hold to fund insurance policies for 30 years, or design me an asset for Apple Computer to hold instead of cash. I mean, Bitcoin is the ideal asset, and there's nothing else that's close.
Mike, a couple more left. Just want to ask you, do digital currencies such as the ones that Scandinavia, parts of the EU, and China, considering, does that impact, or does this have any kind of impact on Bitcoin and other cryptos?
No, once you understand that Bitcoin is an asset and that dollars and euros are a currency, what you see is that digital currencies compete with other currencies. So the digital currency is more threatening to MasterCard and Visa and currency networks and payment networks. And the digital yuan is threatening to the yen and to the dollar and the euro. And they're going to work it out there. The digital asset, Bitcoin, is threatening most of all right now to gold and then to other treasury assets or stores of value. I did a survey on Twitter and I asked, and I got 60,000 responses. I said, where did you get the capital you used to allocate to Bitcoin? It was 49% stocks. It was 21% gold. It was 19% property. It was 10% bonds. So money is flowing from those assets into Bitcoin, and I think that'll continue.
Michael, final question here, and this is really about the many in the audience which are where you were this time last year. There's some which are perhaps even beyond where you are right now in terms of their belief in cryptos and Bitcoin. What's your message to the people who are where you were this time last year? And the message being, of course, what should they do next? Have they missed the boat, perhaps?
Okay, well, so first, you haven't missed the boat, right? People like me, I bought it at 10,000. I bought it at 57,000. I'm buying it. I'll be buying it 100,000, 200,000 because I don't have a better idea. You haven't missed the boat. The number one thing you got to do as an investor, in my opinion, is you have to estimate the rate of monetary inflation each year for the next 8 years. And you have to fill in a spreadsheet with your estimate. Is it 15% a year? Is it 20? Is it 5? Is it 7? That drives every other decision you make. Once you come up with that, my opinion is 15 to 17% on average, but you have to come up with your own opinion because that's the input that drives all other asset values and drives all portfolio theory. After you've done that, my suggestion is you go to hope.com. That's a website where we posted all sorts of Bitcoin material, and there's resources and books and articles and videos. And study this, and don't spend money until you understand it. It takes about 10 hours to really get it, and you'll be an expert in 20, and you could get the basics of it in 3 or 4. But go study it, and then decide for yourself what you think after you study it. The information is free. Most people don't do the work. And so if you don't do the work, you dismiss it out of hand because it's a paradigm shift. If you do the work, you'll say, this is monetary electricity. And the first time in 5,000 years, the human race figured out how to put encrypted money on a digital network and move it around, at the speed of light and store it for 100 years with no power loss. And if you believe that, your decision making will be simple. And if you don't believe that, you should study it enough until you either agree or you disagree, and then your decision will still be simple.